Welcome back, America. This is the Honest Tax Returns video, part 4 of 6, presented to the American people, December 2016. Let's start with some conclusions that we're going to make. Number 1, that income is a gain. Do not confuse income with consideration or compensation for a contract. Wages is federal pay for federal work, and it is lawfully taxable income. Wages is actually income. The 16th Amendment is largely a distraction. It removes the rule of apportionment from already taxable federal income and taxes the privilege of artificial persons operating in the United States. The 16th Amendment conferred no new power of taxation. The Internal Revenue Code can be considered rules respecting the property belonging to the United States. See Article 4, Section 3, Clause 2 of the Constitution. This video might be slightly boring for some of you. Therefore, go watch Part 1 to see practical examples of honest tax returns which lawfully reduce or eliminate your federal tax burden. If you're confused, uncertain, or serious about understanding the tax laws, then keep watching. Also, if the IRS comes for you, you might want to be prepared. So do your homework. They will come for you if your tax returns betray any weakness which they think they can exploit. So, the federal income tax, and on this presentation, we're going to study the word income. What is income? Okay, so numerous Supreme Court decisions, most notably Bowers versus Kellogg Empire Inc. or Company, has defined the word income. And basically it means a gain derived from capital, from labor, or from both combined, including profit gained through the sale or conversion of capital. Okay, so an example would be like if you bought a used car for $500 and then you sold it the next day for $800, well, then you would have gotten an income of $300. No gain means no income. Labor is equal to property, as the Supreme Court has said in Butchers Union. Labor, it is the original foundation of all other property. So it is the most sacred and inviolable. The patrimony of the poor man lies in the strength and dexterity of his own hands, and to hinder his employing his strength and dexterity in whatever manner he thinks proper is a plain violation of this most sacred property. Okay? Labor is your time and life on earth, and it is very, very sacred and very valuable to you. Next, in Atkins versus Children's Hospital, the Supreme Court said, in principle, there can be no difference between the case of selling labor and a case of selling goods. So when you sell your labor by going to work, it's really the same thing as selling a tangible product. Fair market value is defined as the price at which the property would exchange hands between a willing buyer and a willing seller. See the United States versus Cartwright. So, when labor or property is exchanged at fair market value for other property, such as money, the gain is zero. Therefore, the income is zero. If you haven't gained anything, you have no income. What you've gotten is compensation, and the word compensation means to make whole. Now, I want to give you one word of caution, and that word is wages. Wages is a federally defined term under the Internal Revenue Code, and it essentially means federal pay for a service. By the way, service is another one of those catchwords that you don't want to catch yourself performing, otherwise you'll be subject to the Internal Revenue Code, and we'll talk about that as well. So wages is income because it's derived from the privilege of working for the government, and the government, it's their right for you to work for them, so they can tax or excise that right. So if you claim wages, you're subject to voluntary compliance. Again, voluntary compliance means there has been a liability established, and if you fail to challenge that liability, then you must comply with the terms of that liability. Now, we can't really study income without looking at the 16th Amendment because that's where the word income first comes up in the Constitution. So let's just read the 16th Amendment. It says, Congress shall have power to lay and collect taxes on incomes from whatever source derived without apportionment among the several states and without regard to any census or enumeration. It was allegedly ratified in February 2013, but there's a lot of evidence that says it's not. I'm not going to debate that here. There's a lot of material, but I'd just rather not argue it because I have a better strategy. For one, if I argue this case, I won't be heard in court. And also, by agreeing with the adversary, you subject him to his law. And the thing you got to remember is it's not his law, it's our law. And the law has always been on our side. And the truth, and knowing the truth, will set you free. And by saying our law, I mean that the law derives from the consent and the will of the people. And you'll see how that works out very shortly. The 16th Amendment is a law. So with all laws, if you've seen my other videos, there's three attributes of every law. One is who is the authority. Two is to whom does it apply, also known as the personal or territorial jurisdiction. And three is what is the intended subject matter of the law, the subject matter jurisdiction. So let's take a look at the 16th Amendment and study what's going on here. Who is the authority for the 16th Amendment? Is it Congress, the people, the IRS, or the Department of Treasury? I'll give you a moment to think about that. But the answer is it's the people, right? If you read the text, it says Congress shall. In other words, somebody more powerful than Congress granted that right or privilege to Congress. So the people is the authority of the 16th Amendment, as we are the authority of the entire Constitution and government. So to whom does it apply? Does it apply to the Congress, the people, the Internal Revenue Service, or the corporations? The 16th Amendment applies to the people. Remember, Congress shall. So we said Congress shall. People said Congress shall. So it applies to Congress. Now, just to review a little basic civics here, this is the power pyramid. At the very top is God, followed by people, followed by the Congress established by the people, followed by the Department of Treasury, which is a branch of the government, and the Internal Revenue Service, which is a branch of the Department of Treasury. And then down at the very bottom is the U.S. persons, citizens, and corporations. See, you and I, we're up here. And don't confuse yourself with one of these persons down at the very bottom. So what is the intent? Is it to grant Congress power to lay taxes on incomes from whatever source derived without apportionment? Or is it for the people to grant Congress power to tax the people on everything that comes in? Now think about that power pyramid. Stuff flows downhill. You know, people would not grant power to Congress to tax themselves. That doesn't happen. People grant power to Congress to tax the things which are under Congress, and so it must be this part here. Keep these theoretical ideas in mind because they do come up in the future. So now we look into the subject matter intent of the law, and for that we go to the Congressional Senate records from June 16, 1909. And there's a part here which I've highlighted now, and I'll make bigger so it's easy to read. And this is written by President William H. Taft. So he said the decision of the Supreme Court in Pollock versus Farmers Loan and Trust deprived the national government of a power by which, by reason of previous decisions of the court, it was generally supposed that the government had. So he says, I therefore recommend an amendment to the Constitution conferring the power to levy an income tax upon the national government without apportionment among the states in proportion to the population. So it's a tax upon the national government. And what that really means is it's a tax upon what the government gives out. It's the proceeds of the national government that's being taxed. So if you receive any benefit from the national government, then that is taxable. That is the first intent of the 16th Amendment. The second intent is right here, and I've again circled the page and also the section of the page which is of interest, and I've highlighted and I've zoomed out. So what is the intent number 2? President William H. Taft says, I therefore recommend an amendment to the tariff bill imposing upon all corporations and joint stock companies for profit. This is an excise tax upon the privilege of doing business as an artificial entity and of freedom from a general partnership liability enjoyed by those who own the stock. So that is intent number 2. So what is the effect? Because the effect of the 16th Amendment has been debated quite a while. So I'm going to put down 5 Supreme Court rulings as to the effect of the 16th Amendment. And this is going by chronological order from 1916 through all the way to 1988. All which basically assumes that states that the 16th Amendment did not provide for a new power of taxation, that it did not conflict with the general requirement that all direct taxes be apportioned, and that the 16th Amendment has, quote, no real bearing. It does not extend the taxing powers to new or accepted subjects, and it is not the purpose or effect to bring any new subject within the taxing power. And as late as 1988, it says the Supreme Court had said that it's not to have any other effect on incomes which were not otherwise taxable. So in other words, if it wasn't taxable before, it's not taxable now. So let's summarize the effect, intent, effect, and also we'll give the code, the actual law written in the 26 United States Title 26. The intent, as we said, is to confer a income tax upon the federal government without apportionment and a tax on domestic corporations for the privilege of operating as artificial entities. The effect, as we just read from the Supreme Court, was that it did not cause one provision of the Constitution to destroy another, nor conflict with the general requirement that all direct taxes must be apportioned. There's no new power of taxation, and it merely removed the apportionment requirement for the incomes which were otherwise taxable to begin with. So let's look at how the intent translates to the actual code. At 3401, we see the employee as one of the persons that are taxable under the Internal Revenue Code, and an employee is an officer, an employee, or elected official of the United States. That's intent number 1, plus an officer of a corporation. That's intent number 2. Now, what kind of corporation? Can it be a foreign corporation? No, it must be a domestic corporation. And that's why in Section 11 it says a tax is imposed on every corporation. And further down you say the term domestic, when applied to corporations, means created or organized in the United States. And recall from Part 2, what is the United States? The United States is a District of Columbia and excludes the 50 Union states. So everything fits perfectly together. Now, here's a question that a lot of people ask, and that is, if the power to impose an unapportioned direct tax on the American people did not exist before the 16th Amendment and no new power of taxation was conferred by it, then how is the federal income tax imposed on us? Well, for that, let's review a little bit about past tax theory, which we have to kind of understand a little bit. So I've written a very short page on what a direct tax is and what an indirect tax is and how they differ. So a direct tax is a tax on rights. You can't avoid it because it's a tax on your life, liberty, or property. For instance, life would be a capitation tax. Liberty might be a poll tax, and property is a land tax. So those are direct taxes. You can't avoid it. Again, you can't avoid it, and constitutionally, they must be apportioned. Apportioned meaning taken as a function or as a proportion of the census. Direct taxes are generally reserved to the Union states. That's the 50 Union states of the United States of America. Indirect taxes is a tax on privilege. It is avoidable because you don't have to partake in the privilege. I mean, it's a privilege to work for the federal government. It is avoidable, for the most part, not to work for the federal government. You can work for, somebody else. An indirect tax, the rule that is applied is that it must be uniform. It must be uniform through the entire country. And lastly, this indirect tax is a tax reserved to the United States because it's like an impost or a duty or import tax, and that only happens at the border of the United States of America. Okay, so the original power to tax is given in the Constitution at 3 places. Article 1, Section 2 says that representatives and direct taxes shall be apportioned among the several states. By the way, this statement right here is the reason, or one of the big reasons why the Revolutionary War started. So it's inconceivable to me as an American that we would give up on that right by nullifying it through the 16th Amendment to the Constitution. Have you ever heard of the phrase, no taxation without representation? Well, that's exactly what's going on here. In order to be taxed, you must have representatives apportioned among the states, and these taxes and representatives must be apportioned among the states. That is a ironclad rule of the Constitution, and it shall not be broken, and never has been. Article 1, Section 8 regards the congressional power to lay and collect taxes, duties, imposts, and excises. And I know it says collect taxes, but I've interjected the word indirect here. And the reason I've done that is because if you read Hilton versus the United States, it describes what the difference is between an indirect and a direct tax, and it very clearly defines that this part of the Constitution means an indirect tax. Now, another way you'll know this is that duties, imposts, and excises are all indirect taxes, and therefore this word taxes is also within the meaning of the things already defined. That's much like the word includes and including. This is everything, again, fits perfectly. And then Article 1, Section 9 is not a power to tax. It's a power of, it's a prohibition against tax. It says no capital or other direct tax shall be laid unless in proportion to the census or the enumeration. Now, there is another overlooked power of taxation by Congress, and one that nobody ever talks about because I don't know if people really care to study it. Or maybe they do, but I study it. Anyway, that's found at Article 4, Section 3, and it says, Congress shall have power to dispose of and make all needful rules and regulations respecting the territory or other property belonging to the United States. Of course, the word tax is not in there anywhere, but if you look at the last couple words, it says the property or the property belonging to the United States. What is property? Property is also a right. And the United States, as used in this paragraph, means the United States in the District of Columbia. That means Congress has a right over its own property. So if Congress or the United States gives you wages, it, as the source of its wages, has a right to how you spend those wages, including and most particularly how you're taxed on them. So this is the overlooked taxing power, which was not affected at all by the 16th Amendment, or actually, I'm sorry, was the actual part of that is actually affected by the 16th Amendment, because now the property given to you by the United States does not have to follow the rule of apportionment as other as a direct tax would be. Okay, so again, what kind of tax is the federal income tax? We learned this in previous presentations, but it is an excise tax, right? So it is a cut of the action. That is, the wages paid to federal employees is the subject of the excise. So it is also an excise upon the privilege of doing business as an artificial entity, as William H. Taft said. And the 16th Amendment merely removed the apportionment requirement on these taxable incomes and conferred no new power of taxation. In other words, the 16th Amendment can be thought of as the rules respecting the property belonging to the United States, found at Article 4, Section 3, Clause 2. And these are the Part 4 conclusions. Income is not gain. Do not confuse that with the pay that you receive for work. Do not call your pay that you receive for work wages, because that's defined as federally taxable income. And the 16th Amendment is largely a distraction. It removes the rule of apportionment from already taxable federal income and taxes the privilege of artificial persons operating in the United States. Okay, to see practical examples of how these concepts are applied and on IRS forms, please watch part 1. The rest of this 6-part video will go in depth to provide the theoretical support for the paperwork shown in part 1. Thank you very much for watching and for paying attention to the things that are going around in America. Please share, like, and comment. Remember, you have a duty to be honest, to obey the law, and to keep your brother from harm and injustice. So share this with him and other Americans so he won't get screwed on his federal income tax. Okay, thank you.